Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at the last print of 1306.50. We'll call it on this, the 19th day of April. Finally got text time behind us. Now we can have some clean air. But wow, what a move we had yesterday. Of course, today is Tuesday. Yesterday being Monday, we had that news SP downgraded the U.S. debt. And boy, the market really didn't like that, particularly more than likely the global investors in U.S. debt and securities certainly wanted to sell off the market. And boy, did we participate in the market yesterday, Monday. But actually, we're going to talk about the master portfolio here in a second. That's a $5,000 portfolio, and of course, that's actually gone gangbusters. It actually made money on the long side yesterday, so a lot of our swings were short coming into Monday from Friday, so that was very beneficial. We'll look at the MRSEM, check an update on that. Of course, it's just been nailing the turn, so has Swing ESR. Has been nailing the turns on the swing system, so swing's just really outperforming. Nevertheless, the master being a day trade portfolio, a couple systems trading the on a day trade basis, $5,000 account, gangbusters, with I think about 35% return the last couple of days. So a very nice portfolio is the master. But right now we're looking at the intraday dynamics of the market on this Tuesday, and the market's really, fought and crawled, and it's way back. If you look, obviously this means red. Sorry, bearish. The red means bearish. And what was interesting is you actually got price moving against all of our key indicators. Certainly the trend was lower, weren't likely to fill the gap, although the market certainly has tried to fill the severe gap that we had on Monday's early session. But nevertheless, it was full all-out bearish yesterday, so a bit of a surprise that price has managed to crawl its way back. Actually, today we're looking at a little bit of a bullish bias, and in fact, we're at the at or near the highs of the day at 650, 675 or so. 775 is the high of the day, down around 1300. 99.75 I believe was the low. Actually, there it is right there. And 75 was the low. As far as a trade, really not much of a trade opportunity here on the market. Just really not seeing anything, kind of a mixed indication, as it were, on the intraday analysis. So we're really just going to hold off for now, wait and see what happens. Right here we had, let's see, a close right around 12. Well, that wouldn't be right, would it? 1320 or so, we'll call it. So we've gone down to about 1290. That's 30 points, 17 off of that. So we're right at the key fib retracement band. So you definitely want to be more than likely selling. But let's go ahead and take a look at the daily. The daily is a bit more indicative of how everything's going. There's the daily. What a beautiful chart. And actually, we've seen the burgeoning bearish bias on the market, and we have certainly all-out bullishness here long term. Our be-all, end-all, our key measure for our intents and purposes is this blue line right here, very key with the in concert with the 1300 level. Looks like we have a beautiful inverted H&S potential setup, which will mean a blast. Should we get above 1340, certainly we'll probably see about 1400, 1440 in relatively short order, as we've mentioned since way back around here, actually before this triangle formation and the anticipated break lower that we called in our videos. And we've been suggesting that the market is likely much nearer a top than a bottom. And certainly we expect price depreciation in stocks, particularly given the monstrous move we've seen over the last 9 months. But nevertheless, there you see a beautiful potential H&M, but if it fails, it's going to be pretty nasty and quick move to 1240, 1200 to 1240, 1400, 1440 if we get above there. So we're just really kind of looking at the 1280 to 1340 level. Some pretty key indications. Should we break below this level right here, again, we'll just call it the low of yesterday, just a continuation move. And as you can see, the market tried to rally on Friday, just ran into the short-term measure of trend following support resistance along with 1320, and then bam, Had the negative news on Monday, but the price is the final arbiter, and that's what we're watching. And as you can see, short-term bearish in both directional and momentum movement on the market. So we'll be looking again for a break below 1290, 1280 for a pretty nice move, but definitely favoring the short side. Having said that, should we get back above this high, Friday's high, 1322.88, we'll definitely be looking for a retest of 1340 and a potential completion of this inverted H&S setup. So we'll just kind of be keeping an eye on that. We've mentioned the MRCM. How is it doing? Whoa! Are you kidding me? Are you absolutely kidding me? Is that even possible for it to sell at 997 and be at 967 essentially? Another $3,000, long $3,000 or so, maybe four. Yeah, $4,000 per contract about $4,000, and we just lost our time. We'll just have to wing it, I guess. Try to get through everything, hit a button, but nevertheless, $4,000 on the upside, $3,000 on the downside, and that's given back another $1,000 since the lows of yesterday. MRSCM just continuing to really outshine. And look, there you go, $80,000 in profits for the MRCM portfolio. Of course, part of many of our portfolios. Certainly the new Matte Black, $14,000 has been the maximum drawdown. Average trade profit has been $762. This, of course, is factoring in commissions and slippage of about $20 or so around turn deducted from that. So if you get a better fill, then you'll certainly make more money than what's registering here. But there's the beautiful MRSEM. We're going to go ahead and minimize that. We're actually looking for, that's what I was looking for. Where did that go again? Not there. Sorry for that 1 second. We'll scroll over. No, that's not it. Well, I remember where we put it. Here we go. Oh, there's our new website, by the way. Doing a little bit of work on revamping the home page or so, and let us know how you like it. We're quite fond of it. But so that's that. We're actually going to look over here. So MRSCM was $80,000 in profit after slippage and commission. We have right here a version. We'll go ahead and view this portfolio. This is kind of MCM method, multi-contract method, that we've employed throughout the years to leverage returns, and particularly if you get a great system. Look at this beautiful potential cup and handle, actually. Nice little cup formation, little bitty handle right there. Beautiful formation. As you can see, this portfolio, or this, we'll call it a portfolio, given it trades multiple contracts. Looking at a similar return, $73,000. Of course, the average trade net profit is nowhere near the swing system, but you're not going to get that on a day trade, particularly MCM method. But the average drawdown has been just $9,700. It trades up to 10 contracts. Which would be a margin required of about $5,000. Certainly you'll need 9720 to trade this system. But as you can see, that's a maximum drawdown after slippage and commissions. But as you can see, $73,000 in profit and a beautiful opportunity to get back involved. We actually don't have this in any of our portfolios, but if you're interested, you can certainly inquire about the portfolio. There you see right there, bought about 3 contracts yesterday. Didn't really hold. Went ahead and stopped out. Didn't really hold for the remainder of the session here. Another little quick stop out, but nevertheless, that's what that is. A beautiful system with an even less drawdown than the swing. So let's go ahead and minimize that. So we mentioned the there's the swing ESR we were talking about. Look at that, continuing to put up new gains. Look at this. You've got to be kidding me. Beautiful short setup ahead of Friday. Covers at the low at 12.95, back up to 13.08. Is that even possible for it to be trading that well? Detailed. Boom. Nice little move up there. Look at that. And then, of course, is after slippage and commissions. But look at that. Oh, my gosh. That is just beautiful. Again, 12,400. Not quite as nice as the MRSEM, but certainly a profit and money maker. So we're going to go ahead and minimize that. We'll actually minimize, or we'll bring up There's our home page again. You can go there, check out the home page. Here are all of our portfolios: MAP Black, MAP DT, TTTHR, and so on and so forth. Have a menu across there: portfolio returns, testimonials, OX options, and Forex. Boy, Forex has been crazy as usual. Awesome. So you can actually go here to the portfolios. You have them right there. These are some historical returns, our trading videos, play of the day. As you, of course, get in these trading videos, we're actually not going to have a play of the day per se today, but or you can go and ask an analyst if you have any questions, and we'll go ahead and click on right here. So here's the master that we mentioned. Look at that beautiful long right there from the Evo. Part of the master, half of the master. Beautiful. $1,000 per contract. One contract, $5,000 portfolio. And there you can see we've had a bit of a drawdown lately. I think black was up about 30%. So a beautiful drawdown of about 25% or so on the MAP black portfolio. But nevertheless, look at who's outshining, outpacing everyone on the recovery, the rebound. As we've mentioned, you definitely don't want to be participating in the portfolios at the high after 100, 200% run up. You want to wait for a little bit of a drawdown, at least 20 or 30%, and that's exactly what we've had. Look who's already off to the races on a relative basis. The master portfolio up 57.5%, handily outpacing all of our other portfolios at 41%. That is, I believe, MAPDT, venerable. No, MAPDT is up 11%. That's the Delta DTS, the new Delta DTS, actually, with some of our newer trading models. Again, handily performing well. Performing very well, considering it's less than 60 days. We're talking about less than 60 days. $1,230, 25% was the gain on Friday. That was actually Friday before the big hoo-ha. But there you have right here. We're gonna probably, I'm sure we're running late on time. The master yesterday. Again, catching the long side. Look at that. Buying right there and then holding on for the long side another 10%, leading to, 67% as of yesterday. 67% return. So these are $5,000 units. You have $25,000 risk capital to put to work. Let's say you have a $250,000 portfolio. Easily put $25,000. Buy 5 of these units right here. 67% return on 5 units on $25,000. $3,350 is the cash return per unit or so. So really just has been beautiful. Actually, we can go ahead and scroll over and pick up. I don't know where we can pick that up actually. There we go. Look at that beautiful. There's Evo right there. Beautiful trading right there. One half of the master. Look at that unbelievable long setup. So just there you go. If you have any questions, go to the website, chat with Support Team Live, or ask an analyst. Or if you have any questions, shoot us an email to admin@MiniAnalyst.com, and we'll certainly get back to you in relatively short order. And always commended for our service and certainly our profit making, our commitment to making our clients money. I hope you enjoyed the video, and we will see you next time.